So, how do you develop a fundamental analysis strategy? Identify the economic indicators. Start by identifying the key economic indicators that are relevant to the market you're trading. These could include interest rates, GDP growth, inflation, and employment data. Then you want to follow the news. Stay up to date on the latest news and events that may impact your market and trading. Keep an eye on political events, company announcements, and other market moving news. So, yes, understand what's going on, but you don't need to watch the news 24/7. That'll emotionally wear you out. Just know the big news, and if it's something really big, then spend a little bit, read up on it, get the key talking points of the good and the bad, and now you that's pretty much all you need. There's nothing more. You don't need to watch all the updates 24/7. Just get the overall flow of that event. Then you want to analyze data releases. So when the data is released, analyze it, compare to the market expectations, and consider the impact of the data in the market and how it's going to affect your trading strategy. So like I was talking, I use these just for kind of be ready. Market's going to move big and wait for a setup and price to show you where it's going. Don't gamble on the event itself. You want to keep track of the central bank actions and statements as they have a significant impact on the markets. You want to adjust your strategy as necessary. Consider factors such as market volatility, risk tolerance, and your overall trading goals. Again, building your foundation, understanding these news events happen and what the market does when these come out. Usually high volatility swings, sometimes in both directions. Sometimes it goes one way for a while and then eventually pulls back and goes back the other way, which we saw in the last section or in the last lesson. Sorry. So understand them and just be ready. Keep your trade strategy and rules in place and just be ready when they come. I like to trade before and after. Once price gets the big movement out of the way, then I'll wait for a setup to happen. Whatever works for you, back test it. You could find all the dates that news happened, and when you're in the charts, you could see, okay, this news event happened here. Look what price did, what happened before it, what happened after it, and then get an understanding of how these news events work. You're going to want to use a top-down approach for the fundamental analysis, and reason for that is these news events are usually used to go somewhere in the market. If they want to continue the trend down, maybe that news event will put price up and then they continue that downward move. Or they wanted price to go up, so they quickly go down and then shoot up once the news comes out. So you want to always go from the higher time frame down, kind of see where price is heading on the weekly and daily. And then when you boil it down into the lower time frames, you could understand, okay, this is why it did this, because if we go back to the higher time frames, price is looking to go to this area or on track to go down to this area. And that way you're not surprised by these news events and you could almost feel like you can anticipate what's going to happen. But just because you could anticipate and most of the time you kind of know the general way it's going to go, that doesn't mean you trade these. This is something, unless you got super tight stop loss or you just know exactly what you're doing, you're willing to take the risk, just stay out. It's not worth the risk. Just watch them, watch price happen, watch people freak out like, oh, I lost or I won or price hit me out and then it went my way. And then you're happy. You were on the sidelines. You lost no money. You didn't gain money, but you didn't lose money. And you're waiting for price to settle. And then you strike, get your money. And as everyone's freaking out, you got your money, you got your profits. Or maybe you just didn't lose anything and you trade tomorrow. And you don't have to worry about making up those losses because you were anxious to get in and bet on the news event. So besides the higher time frames, you're going to want to look at the overall GDP, inflation, and interest rates and kind of see how the flow of market is happening when these numbers come out. And when you're using two currencies against each other, like the Euro USD, keep track of each other's interest rates as one's going up, one's going down. Look at the market and is that correlating with those interest rates differences? And you'll see, okay, I'm going to start using this as a overview of the markets when I go in the lower time frame. I know generally which way the market price is going to flow. And if you're doing stocks or you're switching from the S&P to the Nasdaq or the Dow or certain sectors of stocks, then you're going to know when, like if the general push is for electric and all that greenhouse, trying to be environmental friendly, it's probably a good idea to find some good companies in that sector, and then you could invest in on the long run through this push and change of the world, and then you could get the growth as those companies grow and make your profit